He owes how much?
$79,205.99.
And I be sitting over here thinking like, are y'all enjoying life or y'all just working to save money?
Just don't pay your loans back. You don't owe anybody anything anyway.
Today we've got a truck loan, a pile of debt, and two people explaining why paying your bills is optional. So basically a financial literacy course, just taught by the people who need it most. Before we get into it, I don't ask often, but if you could, hit that like button, drop a comment. It really helps the channel out. And if you're new, consider subscribing.
He owes how much?
$79,205.99.
And what is it?
It is a 2025 Ram 3500 Bighorn with 14,000 miles on it.
That sounds like a lot to owe on the truck.
Yes.
What did KBB hit it at?
$58,101.
Oh, man. I think KBB's light, but just off the top of my head, without looking at the numbers, we're talking 20 grand of negative equity. So what's he trying to accomplish?
He wants to lower his payment. The only issue with that, he has no money down. His current payment is $1,472.
How much?
He wants to lower the payment, but he owes $20,000 more than the truck is worth. So the problem isn't just the monthly payment. It's that the debt has to go somewhere. And unless the bank starts accepting regret as a down payment, there's going to be no way to make the numbers work.
$1,472.
When I first got in the car business, it was a million years ago, but a $400 car payment was a big payment.
And his interest rate is a 12.04%.
So he's in a tough spot. Obviously, with that interest rate, he's not paying down the principal very much, and he's got a boatload of negative. The problem is, we see this a lot, right? Somebody wants to lower their payment, but when you take negative equity, the really only surefire way to get rid of a bunch of negative equity is to look at a more expensive car, because the more expensive car could absorb the negative equity.
That's completely wrong. The only way to get rid of negative equity is to pay it off. Rolling that into another loan doesn't make it disappear. It just moves the problem to a new payment. A more expensive car might make the deal less risky for the bank, but it doesn't make it less risky for the buyer.
Even a $50,000 truck and try and roll 20 grand into it, the bank's going to go, I'm not going to loan 70 grand on a 50 grand truck. That's always the inherent problem. And we see that a lot. We can run some numbers, but you're going to need a massive amount down.
When I was on the phone with him, he doesn't want to run credit at all.
I'm fine with that.
Which, of course, he said he wants to see what we can do on the trade, if we can do a better number than 58. I told him off the bat, we're going to have to put you on a higher vehicle, and 9 times out of 10, he'll soak up that negative equity, but your payment's going to be higher.
Hey, you told him that?
Yes, sir.
Good job. You do listen to my meetings.
He doesn't want his credit run. That's usually not a good sign, because people with good credit don't normally hide it. They bring it up before they're even asked. When someone's scared of the credit check, it usually means the credit is going to tell on them.
Somebody listens. At this point, it's all going to come down to cash down. So if he has no money down, my advice to him, as much as he's going to hate this advice, keep that truck. You got to pay on it for a while. Now, he's got a big payment, but any little bit that he can to pay a little extra is going to make a world of difference. Just tell him, without running credit and getting into the minutia, there's no need to do that right now. But just looking at the numbers, the only way we're going to be able to get him out of that loan is a big chunk down. And if he doesn't have that, then my advice to him is keep that truck, make the payments on time, don't do anything crazy on it.
The salesman actually gave him the right advice. Keep the truck, make the payment, and put whatever extra money you have towards the loan. It's not the most exciting, but when you're $20,000 upside down, exciting is probably what got you there.
I'm going to expose and update on the rest of the debt that we're in, how much it is. I'm also going to reveal one debt that has actually increased since the last time I made a video like this, and it's fairly disappointing. So let's get started. First, we have a personal loan, which we just recently refinanced. It is sitting at a balance of $31,967.17, and it is at a 10% interest rate. Next up is my student loan, which is currently sitting at $19,761.81.
We're only 2 loans in and already at $50,000. That's close to double the amount of debt I had at my worst. And I know how hard it was to pay that down. So this is the kind of number that starts making decisions for you.
And that is about a 4% interest rate. My husband has 2 student loans, one federal and one private. His federal student loan is sitting at $15,127 at a 3.5% interest rate. I'm going to skip the private loan for now and tell you about our car loan, which is currently sitting at $16,976.41 at a 5% interest rate. Now back to the private student loan.
So now we're over $80,000 and there's still another loan. That's hard to even wrap your head around because $80,000 already sounds bad enough. And that number still doesn't include the interest.
A few months ago, his private student loan was sitting at a total balance of $67,728.52. It's at an 8.5% interest rate. When I checked it the other day, for the purposes of this video, that loan is now sitting at $68,229.69. That is unacceptable, especially because the payment for this loan is over $600 a month.
So the total is around $150,000. That is a ridiculous amount of debt. And none of it is a house. No mortgage, no property. No asset that makes a number easier to understand. Just a massive amount of debt. And a long way back to zero.
I just want to know how the hell y'all saving $10,000 and keeping it in y'all savings account. I can save the money. I save $200 a month every single month. But do I keep the money saved? Oh, like how are y'all keeping the money and forgetting that y'all even have the money in y'all account? Because baby, I be going over there like, how much money in my high yield savings account? How much money in my Roth IRA account? How much money in this account? Like I just be wanting to know. And then some of y'all got 15,000 saved, 20,000 saved, 30, 40. Should I go on?
I can't understand this thinking because the more I save, the harder it is to spend, especially when you're planning for the future. $40,000 saved really isn't a lot of money. It's a good start, but it's not I never have to worry again money. That can disappear fast with one job loss, one emergency, one bad year. So I wouldn't look at that as a lot of money. I'd look at it as not nearly enough room for things to go wrong.
And I be sitting over here thinking like, are y'all enjoying life or y'all just working to save money? Because what y'all gonna do when the money is saved and y'all done let y'all go? Y'all just gonna let it sit there? My biggest fear is saving so much money and I do right by my money and then something happens to me and it get in the hands of somebody else. And they spend the money I done saved up for so long in one day. So if y'all have over $10,000 saved in y'all account, let me know how much y'all saving and how long y'all been saving. Because I'm nosy and I need to know.
She wants to enjoy life with her money, and I get that part. Nobody is saying you should save every dollar and never live, but not wanting someone else to spend it after you're gone. That's a strange reason to spend it all while you're here, because the goal probably shouldn't be to leave with nothing. It should be to make sure life doesn't get worse while you're living it.
Don't ever in your fucking life pay your damn bills when they're due. Ever. Always be late. Let me explain. If you pay your fucking bills on time, like if your bills are due on the 1st and you pay them on like the 25th of the previous month, no motherfucker is going to say, hey, this person needs a loan, and you ain't going to get no money. But if you pay your bills 10 days late, 20 days late, 28 days late.
This is the problem with financial advice online. There is so much of it, and some of it is not just bad, it can actually hurt people. Because someone can hear advice like this, follow it, and end up paying for it for years.
And then go apply for loans like credit cards and shit, you get approved every fucking time. Because the world is backwards, and the person behind the desk is going to say, hey, look, this person right here needs a fucking loan. They can't pay their bills. That's the truth. All right? All you have to do is do what companies do and set forth a plan of repayment, and you'll get the money. Pro tip.
So he thinks if you pay late, the person approving the loan will see that you're struggling and want to help. But that's not how lending works. The bank doesn't see a late payment and think this guy needs a break. They think this person might not pay us back.
Just don't pay your loans back. You don't owe anybody anything anyway. You see, the money that you've taken out as a loan is yours. You created it. If people understood exactly how money works, you'd understand that you don't owe anybody any money. Like, let me ask you this question. When you take out a loan from the bank, where does that money come from? You see, we're sold this idea that when you take a loan out from the bank is somehow giving you something that they already own, and therefore you have to give it them back.
This is where bad advice tries to sound smart, because instead of saying, I don't want to pay the loan back, it turns into a whole theory about money. But the lender doesn't care about how deep the explanation is. You borrowed it, they expect it back. And pretending you found a loophole is the first step before collections.
But the thing is, when you take out a loan, that money didn't exist until you signed that piece of paper and gave the order to the bank to create that money. You created the money. Your signature created the money. You are the backing for the loan. And when you understand that you don't owe the bank anything because it didn't exist until you created it, why do you have to pay it back? And so they then threaten you with this idea, well, if you don't pay it back...
This is where the argument loses me. because even if the money was created from the loan, so was the debt. You can't separate the part you received from the part you agreed to pay back. He wants the money part to count, just not the repayment part.
You might get a CCJ and it might go on your credit report, right? Okay. And you see, this is the problem. We're told that debt is a good thing to have, but not told what debt should be used for. Debt should be used to buy assets, because once you've got assets that create money themselves, you then don't care about your credit report, because banks will just throw money at you anyway. So don't pay your debts back. Nothing's going to happen. And then make money.
Apparently the credit report doesn't matter anymore, because if you spend the money on assets, the score just stops being important. The lenders still care if you pay people back. Having assets can help, but it doesn't erase a missed payment. And it definitely doesn't make a bad credit history disappear. That's it for this one. Thanks for watching. I'll see you in the next one. Bye.